Hi, I'm David from Rumble Finance, located at Brisbane Club Tower, 241 Adelaide Street, Brisbane. Today's topic is going to be how much deposit do you need to buy a property here in Queensland? So the rule of thumb is generally banks like to see 20% deposit. So for example, on a $500,000 purchase price, that'd be about $100,000. Now, keep in mind that's not the only amount of money that you'd require to have. So you'd also need to consider things like mortgage stamp duty. You'd also need to talk about the conveyancing costs that your solicitor may charge and any bank fees and charges. If you're a first home buyer in Queensland, you will actually get exemption on your mortgage stamp duty up to a purchase price of $550,000. Anything above that and you'll pay the standard stamp duty rates. Now, a lot of people are not going to have a 20% deposit because $100,000 is quite a lot of money to save unless you've been saving for a long time or a high income earner or your mum and dad have, loaned you the money or won the lottery or something. So some people are going to have a smaller deposit than 20%. A lot of people will tell you that as long as you've got between a 20 and a 5% deposit, that's 5% of the purchase price, then you should be fine. Just keep in mind, if you do only have a 5% deposit or a 10% deposit, you still need to cover any additional costs that may be incurred. And those costs will include, once you go above that 80% level or less than 20% deposit, what's called lender's mortgage insurance. Lender's mortgage insurance actually protects the bank in case you can't actually make your repayments on the loan. So if the bank has to sell the property and they can't get the full amount that is owed, the mortgage insurance will actually cover that shortfall. So that's just something to take into consideration. Now on a $500,000 purchase price, mortgage insurance on say 95% for example, so you've only got a 5% deposit, you're going to be looking at between $15,000 and $20,000 in mortgage insurance, and that's paid up front at the time the loan is advanced, so on the day that you actually take possession of the property. So with that in mind, you need to have your 5% plus your mortgage insurance plus any additional costs. If you're a first home buyer, they'll obviously be lower than somebody who's not a first home buyer. Now, what I'm talking about here is predominantly homes for people who are going to be living in them. Investment properties will be a completely different story, and we'll cover that under a separate topic. Now, if you have your 5% deposit and you've got to pay your mortgage insurance, sometimes the banks, depending on which bank and how much of a risk appetite they have, which means how much risk they're willing to take in this particular market, they may allow you to borrow 97% of the value of the property. So that extra 2% above 95% means that they'll actually cover some of the mortgage insurance costs for you. It's included in your loan, so yes, you will be paying interest on that portion of the loan, but that may be a risk or it may be a better option for you to get into the market sooner. Now, if you do that, the mortgage insurance companies will require that you've saved that 5% deposit, which you still need to have, over at least a 3-month period. Sometimes it'll be a 6-month period. That means that you've had to have held that money in the account for that full period of time. That's the full 5%, not just build up to the 5%, but you need to have held that 5% in the account for 3 to 6 months, depending on which bank you decide to go with. And that's something that you probably should talk to your mortgage broker and your accountant before you go ahead and actually make a purchase. So those are the basics. So generally, a 5% deposit is the minimum that's required, plus all additional costs. And then the banks will want a 20% deposit plus costs to avoid mortgage insurance. So I hope that helps. If you've got any questions, feel free to email us at info@rumblefinance.com and we'll be able to get back to you with some information or give you a call and discuss it further over the phone. Thank you very much for listening. Have a great day.